How can I get the money together to buy a house? I'm paying so much in rent. We're going to give you some tips and tricks today. So if you're a buyer, you need some money for your down payment and your closing costs. We're going to give you some details. This is Keith Murphy with Essex Mortgage joining me this morning. Once again, our local loan expert. And Keith, let's just dive right in and start talking about, those down payment and closing costs. Where can that money come from?
Sure. Well, the funds can come from any source as long as we can paper trail track where those sources came from. So traditionally, bank accounts, checking, savings, if those monies are in those bank accounts for, at least 60 days, they're considered seasoned. We don't need to know where the deposits came from. If they're within a 60-day window, then we're going to have to figure out, okay, if these deposits were cash, as an example, where did that cash come from? Did you sell something on eBay? Did somebody Venmo you some money after you sold an antique table to them? We just have to go into and source where these funds are coming from. You can also receive gift funds from a blood relative. In some cases, even your boss at your job can gift you funds to help buy a home. But whoever the gift donor is, same thing applies. We're going to have to get 2 months bank statements from the gift donor along with a gift letter to see where those funds are coming from. And another thing that I'm seeing more and more people do right now is take a loan or a hardship withdrawal from their retirement plan.
Okay.
And the thought is, at least the way I was raised, once you put your money into your 401k from your retirement, that's sacred. You don't touch it. Mm-hmm. But when you take a look at, how real estate appreciates over time, and it's a way into the market, sometimes taking a small piece of that and using it to invest in real estate is a good idea. So people will take a loan against their 401k, which means they're going to have to repay that money. It's a loan. But the cool thing is that the interest that is being charged on that loan goes back to you.
Right.
So it's really interest-free money. You're paying yourself back the interest on the loan. And then if it's a withdrawal, I know there's some temporary guidelines in place right now, and I won't get into the nitty-gritty, but generally speaking, up to $10,000 for a first-time home buyer can be withdrawn without early withdrawal penalties from your retirement account to source these funds as well. Again, whether it's earnest money deposit into your escrow, your down payment, or your closing cost. Is that what you were asking there, Kelly?
Yes, absolutely. So if I hear you right, you're saying we've got these various sources. Maybe we've got some savings. Maybe we've got a 401k that we can take a loan against. We may have a very generous boss who will give us a gift, and that could also be a gift. Could also be from family, friends, anyone. And in those cases, we're going to have to show at least 2 months of bank statements to support that money has been on deposit. And if it was deposited within those last 2 months, we need to prove where that money came from. Is that correct?
Absolutely. The only edit would be on the source of the gift funds. The actual donor must be a blood relative or somebody who's very closely related to you, like a boss, like a fiance, like somebody you cohabitate with. It can't just be like your buddy from college who hit it big with Bitcoin and wants to give you some money. That's not recognized as an acceptable gift donor because they're just a friend. Why that is, I'm not sure, but that's what the government rules say in the selling guide. So.
Okay. And again, as you just mentioned, what the government rules say and the selling guidelines, these are all rules that for the most part have been fairly consistent through the last few years. Am I correct?
Yeah, I think that's a good point to touch on too, because I'm asked almost daily, why? Why do I have to give you 2 months bank statements? And I look at somebody's bank statements and I see, well, there's some transfers that came into here from a different account at the same bank. Where's those bank statements? Well, why does it matter? It's my money. Well, here's why it matters. This goes all the way back to September 2011, when our country was attacked by terrorists, okay? And as part of then also the Dodd-Frank Financial Reform Act, it's kind of all tied together. They want to make sure that covert ways of laundering money aren't being utilized through real estate. So prior to 9/11, there really wasn't much requirement on the documentation of the source of funds to close. But what they found, unfortunately, is that leading up to 9/11, there was terrorist groups here in the U.S. who were using I don't know what the word is, dirty money, cash to buy real estate.
Okay.
So maybe those monies came from a different country and were brought into the U.S. and converted to dollars, and then purchase a home, and then they would come to somebody like me and refinance the house to get their money back, and they just basically laundered their money. And there was a lot of that stuff going on. So the government really clamped down back in after 9/11 and as part of the Dodd-Frank Financial Reform Act, and the bolts have not been loosened. It's very, very strict as far as being able to source those funds.
Right. Okay. So there's another source of funds that we had touched on briefly, and that was your IRA, your IRA. There's some rules right now that the IRS is saying we've got this temporary allowance to be able to withdraw up to $10,000. So again, without penalty, without prepayment penalty or early withdrawal penalty, excuse me. And so that's another source potential, but again, check for your particular situation and make sure that you're okay to do that. And the other thing that I've found, we've had, you and I, in a couple of our buyer situations, we've had folks who are planning to take a 401k loan or take money from an IRA. And the recommendation that I've always given them has been to leave it in place until the lender tells them exactly what to do with that money, so that if it's supposed to get wired directly to escrow, that's what happens. Can you tell me a little bit more about that and the reasoning behind that?
Certainly. Well, first and foremost, before anybody, elects to take a withdrawal or a loan against their 401k or IRA, they should always consult with their tax advisor and their financial planner to make sure that there isn't any tax ramifications, or that it helps them hit their overall financial goals, strategy goals. But when it comes down to actually doing it, the reason I don't coach my clients to take the money out now is the capital is now dead, it's not growing, and so I'd like to see it remain fully vested in a conservative, investment goal until they're ready to buy the home. If they pull it out too early, the money's just not growing. Number two is I have clients make sure that they talk with the 401k or IRA administrators long before they're ready to buy, so that they know what the paperwork protocol is, what the time frame is from when they apply for the funds to be withdrawn to the time the actual funds can be withdrawn. And then, ideally, we get those ducks lined up and we let the money sit in there until a house is found, and then we have the client instruct the administrator to wire transfer those funds directly to escrow, so we're not having to paper trail all the hops from it leaving their retirement account. And then, what a lot of people do, and I know who you're referring to, a recent client took out the money now and they deposited it into a bank account, and then their intention is to move that money from that bank account to a different bank account because that bank doesn't have any wire transfer fees, which is fine. But I explained, what's now going to have to happen is we have to get paper trail showing the money leaving the 401k into the new bank, show it going in, then showing going out to the next bank, then showing going in and out to escrow from the third bank. It's just a lot of extra paperwork and paper trailing that really isn't necessary if they would have just left it in the 401 or retirement plan account, had it wired directly to escrow. That's a simple paper trail. It's a transaction history report showing the money leaving that retirement plan, and it's a receipt from escrow showing the money was deposited. The two account numbers match up. You're done with your paper trailing and sourcing. So it just makes life a little bit easier.
Absolutely, absolutely. And especially when you're in the middle of an escrow and there's all this other paperwork that is coming at you in the way of disclosures from the lender and disclosures from the seller, to have one more thing to have to do is just troublesome and cumbersome. Let me just say that.
Yeah, absolutely. Another thing I think we should touch on
Yes.
is that, as far back as I know, and I'm not an expert on IRS rulings, but the $10,000 exemption to an early withdrawal penalty for first-time home buyers, which is considered like a hardship withdrawal.
Yes.
That up to $10,000 without penalty has been around, gosh, for as long as I can remember. It's since COVID hit that in some instances that amount can be, I believe, up to 20, maybe even 30,000. I'm not 100% sure, but it's just a temporary reprieve that people could withdraw money, I think with the intention for survival. If they had lost their job, they had been furloughed, they could withdraw some of those funds and not be penalized.
Okay.
But a lot of clients in the last 12 months have taken out more, not been penalized to buy a house because the IRS didn't stipulate that it was, only for, say, living expenses or rent. So,
Right. So it's not like you have to prove what you're using it for.
No,
That's
that's
what you're
that's just the opposite. They're not making the taxpayer prove
Right.
what they're needing to use it for, whereas pre-COVID you did.
Okay.
It had to be for the specific purpose, up to 10,000 for buying a home. And you
Okay.
had to show why you needed to tap into the retirement funds. And it's usually considered, again, a hardship withdrawal because we didn't have enough in our checking and savings saved up to purchase the home. Rents keep going up, so we're always behind the 8 ball and can't save enough money for this down payment, but we have all this money in our retirement account. We could take up to $10,000 specifically to buy a house. But now that with the COVID rules, the reasons for the withdrawal have been relaxed and the amount you can withdraw has been increased, and it's all just temporary. They're going to reset it back to what it was at some point.
Sure. Yeah, they're not going to give us a free ride on that forever.
No.
So in talking about sourcing these funds, obviously there are down payment assistance programs. That's just, those are part and parcel to, just if it's a program that's there, it exists. It's not like they're going to be worrying about where did those funds come from. It's just they're there. They've been allocated by whatever governmental entity has established that program, and that's a no-brainer. But when it comes to your own money and your own and your gifts, those have to be sourced, at least for the most part, for 2 months. And Keith, are there instances where somebody has to have a certain amount of reserves required? I know FHA and VA loans don't require that. Is that correct?
Yeah, so good question. As far as reserve requirements, that's really held to jumbo loans. So
Okay.
loans that don't fit the Fannie Mae, Freddie Mac, FHA, VA boxes. You're borrowing beyond the county loan limits. Let's just say like, $1 million type of a loan. Those are portfolio loans, and those investors typically want to see at minimum 6 months of housing payments and reserves. More typical is 12 to 24 months. But when it comes to The conventional loans, the FHA and VA, like you mentioned, there really isn't any reserve requirements unless A, you're doing a special like Home Path or Home Ready program with 3% down.
Okay.
They want to see some reserves on those conventional programs. And if you have rental homes or second homes, or you're departing your current residence, converting it to a rental and buying another primary residence, it's when you have other real estate holdings that these reserve requirements come into play for VA, FHA, and conventional. All of those have reserve requirements when you're building a real estate portfolio.
Okay. And are those reserve required funds, are those also expected to be established for 2 months? Or is it 6 months? Did I hear you say?
6 months of payment reserves, but not 6 months of seasoning.
Okay.
So the reserve requirement is still going to apply
Okay.
to the reserves. Like you couldn't say, here's my season funds for my down payment and closing costs, boom. But I'm going to retain these 2 rental properties and we want to see reserves for those 2 homes in addition to the new home you're buying. You can't just get $100,000 cash from a safe, put it in your bank and go, well, there you go, there's my reserves. We're going to want to know, how did you obtain those $100,000? And the reason would be, again, the government requires us to source, paper trail, and season these funds to make sure that nobody's doing bad business. And it gets kind of personal, you know, because people think, hey, it's my money, it's my safe, whether it's in the bank's coffers or my safe, what's the difference? It's still my money. And I get that point, but we have to follow those rules. So the government's going to say, look, those cash, we don't know if you took a loan, a personal loan from a payday center, you took a personal loan from, you know, a rich uncle, and now you've got another payment that you're obligated to that's going to affect your ability to repay back the mortgage that you're applying for. So all these things come into play, and it convolutes, you know, the situation and makes it a little more difficult to put the files together when there's these sources. Like one thing I'm seeing a lot of right now, everybody's Zelling and Venmoing money back and forth to each other. Well, how do you, if I go out to dinner and I pay for the dinner and then you say, Keith, I'm going to Venmo you for half the bill, and I have this Venmo deposit, how am I supposed to source that? How can I paper trail that? So, you know, I actually believe at some point the Federal Housing Finance Authority that oversees all these agencies and writes these rules, they're going to have to amend some of these things to account for the new economy that we're going into, whether it's via Bitcoin or these electronic means of transferring funds. It's just getting a lot more complicated than it was back in 2011. So we'll see how the things change, but they're going to have to some degree going forward.
So Keith, once again, thank you again for all of the great information about down payment and closing cost money, those sources, what needs to happen. And of course, if anyone has questions, discuss with your loan professional, or as Keith mentioned, your CPA, to find out the nuances or what goes on for your particular situation. And as always, Keith, thank you again for your expertise today. Really appreciate it.
My pleasure. And start early on that planning. Don't start meeting with your CPA the day you find a house you want to make an offer on.
Amen.
Start a couple months early and plan this out.
Yes, just like you do your pre-approval with your lender.